Hello everybody, Dadas here with the Dadas Trading System Workshop, and welcome to the next episode of Trade with Dadas. So I want to discuss what happened on the evening session. Well, I had a lot of things to do. On forums. There was a lot of talking on my Skype group as well. I had a lot of activities, and so I wasn't trading for most of the time. And then I figured out I'd have a look and see what was happening. So I looked at the Dow Jones index, and the situation was right there where I saw, like you see, I saw a potential pullback for the end of the day. And again, right now you see that the trend is strongly going up, right? But okay, I figured that on this H4 hour, on this H4 candle, since it's at resistance at it, and for a moment, at least in the beginning, the close zone of the previous H4 was acting as resistance. So I figured out I'd enter like this. Well, because the trend is generally so strong, I was careful, so I put my potential take profit right there, okay, and then I went down to the M1 chart, because again a lot of things here, a lot of symptoms were showing that the price might be going back down to the moving average. And again, like in the morning, there was nothing really on the H4, and maybe it's better not to do anything if the H4 is not pointing directly that the price wants to go down. If there isn't anything on the H4 showing for the down, well, then it's probably safer to go up than to go down. Anyways, what happened here? What happened is that I took a trade, right? I took a trade at this moment, right here, because I saw this exactly these symptoms. So in other words, we had a cross of the two lines right here, the slow one and the fast one, and the price was again showing resistance, right here. It was showing resistance, and the candles became red and gold, right? So I took the first trade I took right here on the basis of this fast line being resistance, and I got and you see it was the volume was 1.1 lot. That's what the risk was calculated, 2%, right? Okay, so this the risk was calculated here. Now I got stop loss right here on 7 pips, 7.07 pips. So I immediately after this price action right here, I decided to re-enter, and I put my take profit right at the same level, right, as before, same level as before. So I took a trade right there, and you see that this trade was a bit bigger volume, a 1.4 lot, because the stop loss was closer, right? Stop loss was closer. So you see, the stop loss was a little bit over here, but the distance between the entry and the stop loss was smaller than right here. You see, the stop loss was right there, and the entry was right there. So what happened then? Well, the price started going down in my direction, so I waited, and then at about this level I decided to move the stop loss right here to have a little bit of break even plus, okay, plus a bit. Okay, and then what happened? Well, like I said, the first priority here is always to make up for the loss and to make a little bit of profit. So the price started, well, first of all, the volatility at that moment, the volatility was much smaller. As you see right now the volatility is at about 26 pips, right? At that moment the volatility was about 14 pips, something like around 14 pips. So that wasn't a good thing, right? And the price started sort of behaving a little bit without, let's say, without momentum. You know, I can see those things, right? I can see those things when I see the movement of the price itself at the given moment. So yeah, it was kind of acting strangely at this level, and you know, provided it was again, it was the same level that the price had bounced off before, and this would be the third time then. So I figured out that you know, after the first candle that sort of stopped, consolidated, then the second candle, I said, now this stinks. This stinks. I have to get out with a little bit of profit, and because you know, the lot was a little bit bigger here, so the profit here was definitely over this loss, and yeah, so I decided to quickly close the position, which proved to be a good decision, because you see what happened next. Next there was a sudden move up, then a retest again. So again, a relatively strong volatile movement, which is price action wise, this is a strong suggestion that something is going on. You know, sort of people who have studied volume spread analysis, VSA, they know about things like that. What's happening is, it's like something like this, a sudden movement down and then come back, right? But you know, this was again on a smaller scale, and now you see what happened. It just ran away and went up. Well, I wasn't interested in further trading. Too bad. Maybe I could have you know, like you know, catch the opportunity or catch the rabbit. No, that's not my system. So in other words, you see, the price has simply run away, or we say it's a runaway train, right? And since it's a runaway train, we are not getting a good price to enter. So because a good price to enter would be somewhere right here. So after the crossing of these two lines. So in other words, you see the prices after the crossing of those two lines, the prices are the earliest, the price is here, and then already the price is there. So you know, more often than not, if you enter at this kind of level, well, you're simply gonna you won't make a profit. You will most probably lose, because the price is going to go up a little bit, but you're not going to take it, because you're going to think that, oh, it's going to go up, and then it'll come back down and take out your stop loss. That's the way it works most often. So, you know, markets are the characteristic of the market at a given moment is not always the same. It always changes, right? So one day the market is this way, another day the market is another way. So yeah. So according to my system, to the Dadas trading system, we simply do not enter, because we are always looking for the best price. Yeah. So it's better, like you saw on my trade, right? When the price, I have to click here. When you saw on this trade, right? Because okay, that's what you saw at that moment. When we enter at a good price, we always have an opportunity to react, yeah, on profit. When we are entering at a not so good price, right, like here, then you know, all we can do is wait for our stop loss, right? Because at this moment we are still not really certain whether the price is going to come back or not, right? And then when we see that the price is coming back because there is some price action, local price action, then we can count on another move. But we never know about this, right? We never know about this until it happens. Okay, so yeah, that was the trade. So generally the day, I wouldn't say it was a good day, but it was a profitable day. So let's put it this way: if it was a profitable day and not a losing day, then it was a good day, right? Okay, or we can say it has been a good day. Okay, good. So thank you very much for this episode. Don't forget to like, don't forget to subscribe, don't forget to find me on Patreon, and also on LinkedIn, and also on Skype. Find me on Skype. You can find my Skype on Patreon, on Forex Factory, for example. Contact me, and let's make it happen. Thank you very much. See you.